Well, hello everybody, Michael Silva here. In today's video, we're going to be talking about momentum. It's slowing, divergences, they're building. We're going to give you updated expected moves and what's on deck coming into tomorrow's trading session. All that and more. Let's get into it. Alrighty people, welcome back to the show. So yes, we had some data come out today, the producer price inflation, and it decelerated less than the prior report. However, it did come in hotter than expected. What took place in the markets? Well, the markets remained relatively flat overall. There was quite a bit of volatility to slightly up. The volatility index VIX was down pretty significantly there. And as far as the 11 sectors that make up the S&P 500, utilities and XLRE rate-sensitive names were up there towards the top. If we take a look at the 10-year yield, you can see that it is still within this channel as price has been kind of pulling back slightly after this parabolic run, which means that the TLT has been projecting itself up further into a declining 20. We have a declining 50, 100, and 200-day moving average. So we broke down and we're starting to see a bounce. Is this bounce going to get reverted where we come retest the lows? Time will tell. But remember, things don't typically move in a straight line. They need to consolidate, and we can go from there. There are some divergences building here. What I found interesting on today, as the index products were up, HYG, which is high yield, was actually down on the day ever so slightly to rather flat. And I just wanted to call out there is sometimes these divergences that play out where we have smart money putting in a lower high, where we have the quote-unquote dumb money from the equity markets putting in a higher high. And these divergences have played out multiple times in the past. If we continue on, there's also another big divergence here taking place with copper. The last two trading days, copper's actually been down. Meanwhile, the S&P 500 has continued to rally. So those are the two divergences that are, a little bit of a red flag for me at this given time. But we'll talk about also here momentarily about the S&P 500 chart and how momentum is slowing down. The dollar has been pulling back after this pretty nice run up here, but it was also up slightly on the day alongside the S&P 500. And we've been seeing these negative correlations. As the dollar breaks down, S&P 500 goes up. It started way back here in October as it broke down. That was the bottom there in the S&P 500. We started ripping out of this July low, and guess what? That marked this short-term top, or the 2023 high in the S&P 500 as it stands right now. So as we had multiple days pull back, we had multiple weeks to the upside. Are we just taking a little bit of a breather before heading back up in the dollar? Remember, it's still a bullish trend. We're still holding above some key levels. We shall see. A couple other things that took place today was oil was down pretty significantly, down 2.88% on the day. Gold was up slightly, which was a pretty nice move. So this was probably driven by the move down in rates because the dollar, like I said, it was up ever so slightly, and they have typically a negative correlation there. A couple other interesting aspects of the markets was Bitcoin was down. This could be coming because we do have some stuff going on as far as the court goes with Sam Bankman-Fried. So down 2.31%. And sometimes Bitcoin has been a good, strong correlation to equity markets. So is Bitcoin potentially sniffing something out that the equity market has not yet? We shall see. Ethereum also down pretty decently on the day, but we're seeing a little bit of a snapback from that 1550 level. Overall, the price action has been rather flat. You can see a key level up here is at around 1750, where we had resistance multiple times and support multiple times there too as well. Now going into tomorrow, we have more data coming out. That's the core inflation data, right? We'll see if it comes in hotter than expected, as expected, cooler than expected. We shall see, but it's going to be an hour before the market opens up. So it's imperative that we look at what is the market pricing in as far as risk going into tomorrow. Now, I talked about the slowing momentum, and this is where we kind of dive into the technicals of candlestick charting. So I wanted to call out here, as price consolidated, we put out a video, said get ready to rumble, right? Because when things contract, then the next thing that comes up is expansion. Well, we broke out and we expanded to the upside. But I want you to pay very close attention to these four green candles. Notice the body, how we have a big authoritative candle. We gap down a little bit on a pullback. We have a little bit smaller of a body. Then we have a little bit smaller of a body right here. The range was decent, but the body was smaller. And then over here we have a hanging man type candle where we even have a smaller body. So notice the widths, the ranges of the body are getting smaller and smaller. That right there, people, is momentum slowing itself down or price contracting there as far as the body of the candlestick perspective goes. Okay, we tag the upper expected move for the week pretty much to the T. So we're in its little happy place as price broke down today. We started recovering from those levels a little bit later in the trading session. Now, a big area of resistance to watch on the SPX is going to be that 4,400. That's a gamma exposure level, but that also lines up with the gap fill right just above us. Okay, now if we take a look at the 15-minute time frame for the SPY, we talked about yesterday where if price pulls down, potentially look at the daily expected move or the week to date. Well, we never reached the daily expected move, but look at just how pristine the weekly expected move, weekly anchored VWAP tagged into. So price, we gapped up, right? We got above this little area of resistance early in the trading session, but we came back down, pulled right into the week to date anchored VWAP, and we started really kind of blasting through that level. So a lot of volatility, right? Pretty much down and then straight back up. And we're right back where we, started the, where we tagged just the other day. Overall, we're above a 5-day moving average that's inclining. We're above a quarter-to-date anchored VWAP that is inclining as well, but we're not too far off the top of the upper weekly expected move with CPI data coming out, and we have earnings on Friday. So just be careful because as we know, if you look at this in terms of probabilities, 68% of the time, the S&P 500, actually even more with the SPX, it's more like 70 to 80% of the time, closes within their weekly expected moves. So that means we have some reward to the upside. It could always break out, right? And we can get dynamic hedging and push us even further out. But if we play it like that, even if price comes out here 68% of the time, the probability is that we close within this specific range, and we've already tagged it for the week. Now going into tomorrow, the expected move here is at 439.78. And then the lower is 432. If we get a very hotter than expected, or if it comes in cooler than expected, way under estimates, start looking at these 2 standard deviation levels potentially to tag. Remember, as time progresses forward, the 5-day moving average is going to continue to incline. So always look for pullbacks into that and look for strength thereafter to produce another higher low. That's all I got for you on today's episode, everybody. See you later.